Today we're going to talk about the volume analysis basics and how I can kind of simplify for you guys. And in a later future date, we will go into how you can actually read volume in price action. So we need to first learn the basics before we move on to that. So what is volume, right? That's the main question. Surprisingly, not a lot of people know it. So we'll just dive right into it. So volume is the amount of shares or contracts traded in a specific time period. So, for example, if we're looking at a 1 minute chart, and let's say a person were to buy 500 shares of Tesla, the volume will show as 500. It doesn't show as 1,000, it just shows as 500. Just keep that in mind. It's just the amount of shares or contracts traded in a specific time period. This applies for both futures and stocks. So that's why I put contracts in there, right? So why is volume important? Well, volume is important because it confirms trends, and it potentially shows signs of reversals, and also helps shows and confirms breakouts that are possibly happening. I know a lot of time people get into problems where they try to chase a breakout, and they get caught, and they end up losing on the trade. Now, volume is not always going to give you 100% on breakouts, right? But it can definitely, possibly help you increase your win rate if you're seeing a valid breakout that's happening in front of you. So we're going to dive into examples and so on and so forth. Volume also is one of the few non-lagging indicators available for traders. I cannot stress how important this point is. No matter what indicator you show me, whether it's RSI, MACD, SMA, EMA, what else? VWAP as well. All of these are called lagging indicators. What that means is it does not go according to the live data, it goes according to the previous data. Versus volume indicators, such as the volume candles we're going over today, or the VRVP, shows live data in that moment. So, the second a transaction goes through, you will see that change on your volume candle. I cannot stress that enough. It's one of the things that I find very important. You guys have seen I don't trade with indicators. That's just me. My whole thought behind that is, why would I go according to lagging data? Why not go according to live data? So that's one of the greatest things about volume. It's not lagging. So how does volume relate to price? Well, let's make it very simple. The higher the volume, the more interest. And the lower the volume, the more uncertainty and less willingness there is for traders to enter. Again, I'm all about making things simple. So for the people who have 2.3 brain cells like me on an average daily basis, let's make it even simpler, right? Look at my beautiful drawing of this representation of what I think volume looks like. Wow. So right over here is what I just drew of volume, right? And you could see 3 ascending bars. So we're basically representing that volume is increasing. Versus to the right, we could see here that in this example chart of Apple, and we will get into real examples, so don't worry, we have a bullish trend. And what I'm trying to show here is, with the increasing volume, it shows that the trend is more stable and a lot more traders are behind the trend. As you can see in the bottom, I wrote increase in volume in a trend. Either way, it doesn't have to be bullish or bearish. It's either way. It works both ways. Shows the strength of a trend. Versus, if we were to talk about the decrease, we got the volume right here, right? And we got the chart right here. If the volume is decreasing, and let's say we're having another increasing price, if the volume is decreasing near the top, what that could potentially signal is the fact that the traders, whether it's hedge funds, you, your mom, your grandpa, your grandfather, the uncle that doesn't listen to you at 4 p.m. in the afternoon, they're not confident in the trend that's going on. So what that usually would do is either it will show weakness, right? So that's what that means. It's basically showing weakness in the current trend, and that could lead to a few things. That could lead to either a reversal. That could usually, what it leads to is consolidation. So there's many things that you could kind of analyze with volume. And we're going to get even deeper into this. We'll go over how to add the volume indicator and the settings on TradingView later. I know it's pretty simple, but I just want to get a few things out of the way before we actually go to my actual TradingView. So just want to put that in there. The greatest thing about volume is you could use it for day trading and swing trading. I've always told and I've always expressed how in my trading experience for the past 11 years, I personally believe I make the most money when I swing trade. I believe the money is a lot better made on swing trading compared to day trading. And also, additional to that, even if you do want to day trade, it's always important to know the strength of a trend and the overall trend of the stock you're trading on a bigger time frame. So if you're day trading, let's say Tesla, you need to know the sentiment of the stock on a larger time frame like the daily, just so you know which are the higher probability trades. If, for example, Tesla is bullish on the daily time frame, I would much personally rather get into calls because I know if I get into calls, one, there's already a higher probability that it's going to work, right? Because I'm trading with the trend, the bigger trend. And two, there's a little bit higher chance that the trade will actually extend or continue the way that you want it. So if you're fighting against the bigger overall trend, let's say Tesla's bullish on the daily or the 2 hour, whatever, right? And I'm taking puts. Yes, it might work, of course. I'm not going to say it's not gonna, but you know me, you see my trades, you see my trade log. I'd rather go for trades that last, right? Like 80%, 100, 150, 350, and with IBM we got a 860, right? So I always like trading with the trend because when you do that, your trades have a higher probability in my experience and they usually tend to last longer, which obviously results in bigger trades and bigger profits because I've always been vocal and advocated for mastering how to use runners. All right, let's move on because I'm already ranting. Mastering volume analysis can potentially help in adding raw data as confluence. You guys are already looking at charts, you're drawing levels, or might not know how to draw levels. Again, we have videos on that, but regardless of what you know or what you don't know, volume analysis won't hurt you. What it will do is it will show raw data, as I said, because it's live data or data, however you want to say it, and it's just something that could add confluence. You can also view the great thing is you can view volume data as columns or as an area. We'll get into that. Don't worry, it's not complicated. But the reason why I stated this is because sometimes some people perceive information in different ways. Completely fine. Some people would like to view a volume as like columns, something like this, or like an area where it's like something like this, which is just like a shaded area. But I'll show you in just a second. So right now we're going to get into an example of an increasing and decreasing volume. I chose one of my favorite swing stocks for this, which is Kroger's. The reason why I chose Kroger's is because compared to other stocks, it's a lot less volatile and it follows price action a lot better when it comes to swing trades. So we're going to bring up Kroger's right here. So right here, once I let my stream kind of unblurry, because I don't know how to stream my iPad much clearer to my PC, Windows PC. Right here we got a chart of Kroger's, right? We got multiple trends we could look at. We got a bearish trend right here. We got a bullish trend. And we got a short squeeze followed by a descending trend, right? So let's look at this. And again, I'm sorry if it's blurry. We'll go on to a real chart in a little bit. But I just want to use my pen here and kind of draw because it's much easier. You could see a few things here on volume. Around this point, you could start seeing volume increased, which again we'll go into a little bit deeper because that's more diving into the reversal part of volume. But you can see here as the price was descending, so actually let me remove that since I don't want to talk about reversals at this moment. As the price was descending, you could see the volume, right? If you want, you could draw a line, whatever you want to do. You could see the volume was increasing at this time, right? I'll just draw right here. You could see it's increasing, right? You could draw a curve, whatever you want, and you could see that once it's increasing, the trend continues further down. This is because once Kroger started breaking down, there's a lot more traders that are confident in the sentiment, and whether it's puts they're buying, right, and causing squeezes, or short selling, there's a lot more traders involved, and they are confirming with the trend that hey, it's bearish, right? So there's an increase of traders in the market, and you can see as the lower and lower Kroger's goes, overall you start seeing the volume kind of the volume kind of decreases at an overall rate, right? You can see the starting point around over here is much lower to the bottom point around here. What this basically is showing is the decrease in traders of Kroger's near this endpoint because they believe or they don't find certainty of this bearish trend continuing. We're not going to talk about reversals just yet, so we're just going to skip the whole Kroger's reversal part. But you can see once this bullish trend starts up over here, the increase in volume, becomes pretty strong. You could see as the price increases, the volume increases as well. If I were to draw just a little curved line, you could see the volume increased significantly well. Yes, you could say that, the volume is increasing because of earnings. Absolutely. Nothing wrong with that claim. But here's the thing. Similar to IBM, you can't tell me that IBM was just a fluke. I did not do that just because I was guessing and hoping IBM was going to work. No. When you have not a lot of times, but sometimes, when you have a low volatile stock heading into earnings, usually price shows you sometimes, emphasis on sometimes, what traders believe the outcome is going to be. That's what happened with IBM, right? We had consistent bull flags. We had increasing volume. If you were to go on IBM's chart and you were to look at the volume, it's definitely increasing. So we're seeing an I'll show you guys in a little bit, but you're seeing an uptick in volume, which means that, there's confidence in the bullish trend. There's always a saying which you guys may have heard or may not have heard, which is someone always knows something. And that's just a fact. That's just seriously a fact. I mean, why do you think the option flow exists? It's because you're trying to view unusual option flow because someone always has information, whether it's people inside the company, whether it's a grandfather who has a grandson who works in Apple or Kroger's, or just a hippie who managed to overhear somebody walking past them while they were scrummaging for pennies on the street. Somebody always knows something, right? So you always want to follow where the trend and the information and the data shows you. So you can see here, the increasing volume on Kroger's eventually led to this huge short squeeze after Kroger's, had positive earnings, right? Moving on, you could see the descending trend here. You could see right around where Kroger's was to stall. Sorry, let me just erase that. You could see around the time that Kroger's was stalling out, the volume decreased, right? So this shows a less certainty in the continuation of that trend. And following that, we saw the decrease in price, and we also saw once the bearish trend started, there was a little bit of an uptick or unusual volume candles that started the bearish trend. And you could see eventually, the volume was high, but then it decreased, it spiked up, decreased, and then right around the reversal point, it increased, which again is because of earnings, and you had a continuation, and you had a reversal to the upside. So this is just an example of Kroger's. We'll get into more examples on natural chart in just a second. But down here, oh, seriously, do I need to actually, one sec. All right. Down here, you actually see the whole area thing. I was talking about volume. If, for example, this whole bars thing down here is too complicated for you to read, that's absolutely fine. TradingView and a lot of other trading platforms allows you to make it into an area where it's a lot more smoother and easier for you to see what's actually going on. So when you actually see descending volume, it's much easier to see because you just have an area that's going up or down. When you see increasing volume, you could just see the tops over here. Again, decreasing, easier to see. Increasing, way easier to see. And increasing, unusual activity, stagnant. You get what I mean. So if you find this way much easier, that's also an option. Now, as stated before, volume can also show potential breakouts and reversals. So lo and behold, I got everyone's favorite or most hated stock, Tesla. And the great thing about reversals is they're actually very, very easy to spot with volume candles. And the biggest thing that you have to breakouts and reversal are very easy to find with actually volume. But the biggest thing that work against you is trying to avoid false breakouts and false reversals, right? Everybody has had that issue. Completely fine, happens, right? So I'll get into how we could potentially avoid that with volume. So before I go into the reversal part, I'm going to go into the continuation or breakout. Not continuation, breakout. So we can see here, I'm going to just draw this line, and we're going to pretend I'm drawing a level here, or a range. And we have this range on Tesla, which spanned, if I were to guesstimate, between 165 to 185. All right. And we can see here we had a breakout eventually of Tesla around this area. So that's a very ugly drawing, but you get what I'm trying to show. So tying back to what I said, what are you saying?
What was that?
I don't know. It looked like a potato that was put in like under some heavy person's butt. But as we stated earlier, volume increasing shows the confirmation or the sentiment or the cockiness or the confidence in a sentiment, right? So as you could see, once Tesla starts breaking out, you start seeing a huge uptick in volume. And we'll go to this exact chart on Tesla so I could show you what I'm talking about. Now, here's the thing. A lot of people have the problem of entering trades too early. It's something that all of us have faced, but volume analysis can sometimes prevent that from happening. And the last thing we want to do is enter into a breakout trade too early, because chasing breakout trades are some of the hardest trades to capture, because if you don't get it right, the losses that follow, because you're usually taking it at a level or a break, like a level break or a trendline break, those are actually followed by big losses. And then eventually, like, it ends up going your way or just rejects and you're already out of it with a big red, frowning face. So if you see an uptick in volume once the price breaks out of a range or a level or a trend line, that usually signifies that the trend is going to continue in that side. If I were to draw a line right here, you'll see, and that line is a little bit off, but you'll see, sorry, I don't use my iPad as much as you could clearly tell. You could see that these big volume candles are followed by these two subsequent price candles. So you do not have to enter here because you don't really have volume. You don't have really confirmation. I mean, you can say yes, you are having increased volume, and I'll completely agree with you. But here's the thing: just like in price, you always had to look at history. So if I were to draw the line, you'll see here that if you were to just take the average volume space, if I were to take Tesla around this candle right over here, this candle, right, I'm pointing to it right here, this one. Yes, I could take it at that point, but I'm also risking because I'm touching the top of the level and it's still not abnormally high volume. But once we break out of this range, we start getting abnormally high volume, which shows an increase in confidence of the sentiment. And even if you were to take a call, Tesla call, which by the way I did, on this day, near close, as we talked about my significance of taking trades near close, Monday, if you were to take it around this point after waiting for confirmation, this movement in price ended up leading to 740% in Tesla calls for 3 weeks out. 3 weeks out. That's the significance of waiting for confirmation and knowing that a breakout is actually happening. So we'll get into more examples, but I did want to show you the importance of trying to figure out, okay, is the stock actually breaking out of this range, or is it just staying in here? Is this a false breakout, false breakdown, so on and so forth. Now reversals are a little bit different. The easiest reversal to see is when reversal candles are small, but the volume candles are huge. What this basically represents, if I were to put this in a very simple way for you to understand, because I'm dumb too, so don't worry, there's nothing wrong with that. If the volume is so high, but the price candles are so small, that basically tells me that let's say there was a trend to the downside, right? Let's just take this for example. Let's say there's a trend to the downside. And around this point, and yes, I know, just ignore earnings for now. I'll go into another example that doesn't have earnings. But let's say, you have this decreasing price, and around this area over here, the sellers, which have been so strong till this point, are unable to push the price down that much. But the volume candle is so high, right? So you're like, oh, wait, what's going on? Well, think about it like this. If the sellers weren't able to push the price down in a significant amount, and there's high volume, what that suggests is the opposite party is stepping into that current moment. So in this case, right over here, this would mean that buyers are stepping in and countering the sellers, which is why you end up with these two very small candles, because the sellers and buyers are battling at this point. And the fact that the sellers cannot push it down a significant amount, as you can see, those candles are very small, shows that the buyers are that strong and available and accumulated at that area to potentially have a reversal into the upside. Of course, around this time point, Tesla did have earnings, so the volume did, add on to that. But let's take an example of when Tesla did not have earnings that impacted the volume. Tesla right over here had a descending price after earnings, and you could see it was a ABC correction pattern, if you guys know Elliott waves, or you could call it just a correction pattern. And right over here on this candle, you could see, if I were to draw a line, and I'll actually show the chart on TradingView, you could see the volume candle that it was following, or the volume candle for that daily candle, was pretty big compared to the previous volume candles in this area. So what that suggests is the sellers are weaker compared to the buyers at this point. So before I move on to the actual charts, one of the biggest things to remember is it's always best to avoid breakouts and reversals with low volume. Take everything I said and do and just take the opposite. For example, if you have a breakout, let's say to the upside out of a range, and the volume is low, and again, you always want to look at volume and look at how volume prints out after the candle closes, because there's no point in looking at volume really while the candle's active. So what I mean is, let's say you're looking at a daily or even a 5-minute candle. It's usually better to look after the 5-minute candle closes so you could actually see the volume and how it ended up printing, compared to trying to figure out where the volume will go during the candle being open, right? So if you get a 5-minute candle trying to break out of a range, and let's say it does close above the range, but the volume is very weak, maybe it potentially would be a better idea to wait for more confirmation, which could either be a followed green candle breaking out of the range with higher volume and closes with higher volume, which could then signify or give you a signal for you to enter into calls, right? So keep that in mind. And reversals as well. If you're seeing like a downtrend, right, and you have like a massive, wow, that's ugly, and you have a massive like green candle, whatever, and looks perfect, but the volume is very low compared to the previous volume, maybe it's not worth entering, because what that shows you is, hey, you got a really strong bullish candle, but the volume shows you that, hey, maybe sellers really weren't as abundant at that area, which, yes, it could lead to a reversal, but maybe is it better to wait for another bullish candle and higher volume, right? Why not? Because then you could eventually potentially avoid a loss. My whole perspective when it comes to trading is I'd much rather miss a trade than get into a loss. I'm very greedy, and I have a huge ego when it comes to trading, meaning I love being right. I do not like being wrong. And hey, you can say that's so weird of you, Kevin, or whatever, but hey, that's led to my success. I really love being right, and I don't want to be trying to be the first one in a trade. I'd rather be the person who gets confirmation for what he's looking at and get that 40 to 80 to 150% because I waited for the confirmation. I don't need the extra 10 or 20 or 30% I could get if I tried getting in early and then risk getting into a 40 to 50% loser because I wanted to just be the bull of the crowd. Okay? Also, volume is always the highest in the first and the last 30 minutes of market open to market close. That's obviously obvious, right? Because that's when people are buying and selling shares. That's when orders from the previous days going through. And then near close, similar to me, hedge funds and banks and whales, they start placing in.
MOCs.
Would you say?
MOCs.
Yeah, they start putting in their orders at that time. Whether they're trying to hide the order, whether they're waiting for confirmation, whatever it is. Usually 30 minutes, and the last 30 minutes of market close and market open is where the highest volume is. So when you're day trading, the reason why I'm pointing this out is because when you're day trading, you cannot always look at the first candle and be like, oh, that's massive volume. I gotta go in this trend, right? It's probably not best to get faked out by that. So always keep that in your mind. And I've always said, and I'll always stick with this, volume and price is king. I'll always stick by that. I have not found anybody or anything to prove me otherwise. So we're going to dive right into the charts with my trading view and finally get off this iPad right over here. I'll bring over my trading view from my other screen. All right. So we're going to go back to the examples I was showing. So we'll go back to Tesla, for example, just so I could show in a less blurrier version of what I was looking at. So we go to the daily and we go back to the exact area I was talking about. We have the same range. Wait, let me make sure I'm streaming the chart. Yeah, okay. So you have the same range you have at this point, and you have the breakout right over here. So you could see that if I draw an arrow, this is the corresponding candle, volume candle. And if you take this volume candle and you compare it to the previous volume candles, it's not really significantly that high, right? So maybe if I wanted to wait for confirmation, I would wait for it to break out. And you could see if I draw arrows again, I just realized I skipped a step and I didn't talk about how to add the indicator and the settings for it. But you could see here, if you reference the volume candles that followed, it's actually better or smarter, not better, but smarter to wait for confirmation because you could have waited for this candle right here, and this candle is astronomically higher compared to all the candles beforehand. So let me delete this volume indicator. Let me show you how to add it. I know most of you guys know how to, but some people don't. So you go to indicators tab on trading view, and all you do is you just search up volume. Wow. You search up volume. Jeez. Okay, and it's usually the one that's it's under technicals. So you could actually technically go to technicals tab over here and scroll down until you find the V section, and then you add volume right over here. Now let me reset this. So this is how volume comes out when you put it on default. You can see here it's a little different than what I put. You can see here there's green candles and red candles. Now there's a reason why I personally put the same color candles when it comes to volume. This is preference, but I think I much rather do it this way. I'm all about trying to not get extra fluff or get hesitation in my trades. I just like looking at everything and having a concrete idea. And I personally believe that having different color candles for volume makes it a little harder to actually give you a pure sentiment. What I mean by this is, let me try finding an example. Right over here, is this earnings candle? No, it's actually right after earnings. So this bearish candle will show you a red volume candle. And you might look at this with, let's say you're just in the heat of the moment and you're trying to enter into whatever trade. You might be looking at this and you might think, oh my goodness, there's so much selling volume. But then lo and behold, after that, you just get a huge squeeze to the upside. So when it's printing red and green, it's not showing you buying and selling volume. And that's the most misleading thing about volume indicators. I don't know why they're different colors. Thinkorswim does a great job. If you add the volume indicator on Thinkorswim, it's just one color. But when you add it on TradingView, it's so misleading because it shows you buying, quote unquote, buying and selling volume. There's no such thing that you could see. You can't differentiate it. And yes, there are some indicators, which I have flagged over here, which shows you buying and selling volume bars. But again, I cannot stress this enough. Sometimes it will help you, but a lot of times it's just fluff. And I personally believe, and you could completely ignore what I'm saying at this point, but I personally believe, in my experience, it is much better to just take both growing, quote unquote, and falling volume and just make it the same color. It doesn't have to be the same colors I'm setting now because I'm just choosing a bland one because I'm a bland monotone person. But you just might as well make it the same color because you're looking at the same data, and having it green as red is not giving you more data to look at. And in fact can actually confuse you when you're trying to read volume quickly, which can happen, let's say, if you're trying to take a swing trade the last 10 minutes or getting into a day trade. So that's why I personally have volume as the same color. One thing I did not talk about on the whole writing thing is when it comes to volume, you can actually turn on something called a volume moving average. What this does is it shows you, and I'm going to make it a little bit bigger or thicker just so you're able to see it, and I'll make it a white color so you're able to see it a lot clearer, is it basically represents the moving average or the average around of volume around a certain time period. So this moving average for volume, in the inputs tab, you can move over to this. You could set this moving average length. Usually, the greatest rule is to stick around 20. That's just the sweet spot for when it comes to using the moving average on volume. And you might be asking, hey, Kevin, what's the benefits of using this? Well, let's take, for instance, the same example I had here with the Tesla breakout. If I draw this back up, and I don't act like a grandpa and I do this quickly, you could see here around this time period, the entire volume of Tesla is below the moving average. You do have a few peaks here, but the great thing is it kind of aligns with the upward movement. So it's fine, right? But you could see once the volume breaks out of the moving average, that signifies that the volume is unusual compared to the previous volume in the last 20 days. So this would show you potentially that whatever is happening at that moment is it has a lot more confidence, and the sentiment has a higher probability, because again, nothing is guaranteed, so it has a higher probability to continue in that way. So that is why sometimes having the moving average on your volume is a really good perk. I don't see a lot of people use this. I don't get why when they try to use volume, but it's just something great you can use, right? You could see every single time there's a high unusual volume, so there's a usual sharp movement that happens afterwards. So you can have the moving average on. I personally don't. The reason why I don't have it is not because of any specific reason. It's just because I could kind of see very quickly, the range or the average volume on Tesla, and I could just kind of, or any stock, and I could just kind of guess where the moving average would be. I personally just like having less fluff. All right. So that's the whole reason, and that's the way you would add the volume, and that's the way you would have the moving average on there to kind of show you the average volume. And that's also the main point of why I have the same color versus different colors that would kind of screw up my mind. Maybe you're smarter than I am. I'm not going to put that past you because I'm, again, 2.3 brain cells on an average day. So you might do a lot better than me having green and red volume candles. And if you are really interested in seeing quote unquote buying and selling volume bars, even though this is not completely accurate, you can use this. It's called buying/selling volume bars. But I personally will be honest with you, and I think this is inaccurate. It has been inaccurate. And you can never clearly see buying and selling volume. Because again, as I said, volume shows you the amount of shares that are trading around that time. So you can't see. It's not like, you just can't see the difference between buying and selling when it comes to volume. Now we're going to go to different charts. We're going to go into scenarios for day trades and swing trades. Since we already kind of went over the swing trades part, we're going to move over to day trades. So I'm going to Just because the are names such as Meta, Microsoft, and Tesla and Apple have had a high earnings, I mean, not high earnings, high volatility because of earnings, we're not going to really look at that. So we're going to go to 5 minute, and I'm just going to pick a random stock here that people usually trade. Let's go with, I think Amazon didn't have its earnings, right? So let's go with Amazon. Let's see what volume could tell us at this point. Let's look at, today was the 30th, right? All right, let's look at 30th. So starting point of 30th is right here, 9:30. We're at the 5 minute chart. And you can see that, as usual, the first 30 minutes has the highest volume, followed by the last 30 minutes usually having the second lowest volume, right? Around this last 5 minutes, first 5 minutes, last 5 minutes. And if I go to a 30-minute chart, you'll see the same thing, first 30 minutes versus the last 30 minutes, and in between it's lower. So you never want to just get faked out by this, because just because of the open, right? You can see there's the open. Just because the open has a high volume candle does not mean, hey, this is printing red, let me just get into puts. Because yes, you could have gotten what? 5%, 10%, and then gotten completely eradicated. You would want to get into an entry like this versus this, right? So how do we tell this on this chart right now? Well, let me kind of zoom out just a little bit, and let me look at Amazon right here. I've always said that the easiest levels to find are usually supports that turn into resistances and resistances that turn into supports. The reason why I say that is because those levels have higher likelihoods to actually holding sturdy, right? I can't think of another word, so I'll just use sturdy. So let me delete this because it's just annoying. You could see here Amazon on the previous day had a previous support that it kept on bouncing off of repeatedly, right? We have 1, 2, 3, right? Yeah, 4 times. So 4 times we've been bouncing off of Amazon at this area. I've also said previously in a previous live session, I said previous too many times, that levels should not be looked at precisely and instead should be looked at as areas of interest. So if we kind of make this into an area of interest, you could see there's 2 levels you can look at. This level that we signified right over here, and a little bit higher level around this area over here. The reason why I chose that level is, no, I'm not just trying to make this picture perfect. This is what I legitimately would have done, is because you could see that price bounces, yes, at this lower level of 236.55, but it also hesitates around 237.04. So it's very important to add this area, because now, instead of trying to be so perfect and trying to short at this level, if you were to break, come and test this level and reject it, you now have an area to look at. You can also try to put this level over here and be like, hey, it came to this level and rejected it, but we're just going to take that out because we're going to give ourselves a little bit more leniency and just say that we were not quick enough to identify this rapid movement or sudden movement in price. So how do we go according to this trade? Well, we could see here that we had a huge rally or bounce a few minutes into open for Amazon. We come in, we test this area of interest, we get a candle that closes very bullish above that very strong level, but then the next candle closes very, very subpar. And here's the thing, we talked about reversals. Reversal candles usually are very insignificant when it comes to the amount of price that it gains or loses, but the volume, if it's really high, can show that there's a lot of traders active at that point. So you can see for this candle right over here, we have a very high or large volume candle that follows. So for this bullish trend, you could see these 3 candles you had, so we'll just call a mini bullish trend. You had descending volume and a very, very low volume. This is why, again, I talked about breakouts in that little thing, right? I said right over here, remember, it's best to avoid breakouts and reversals with low volume, right? I said that right there. Look at what you have over here. You have a breakout of this level, but look at the volume candle that follows. You have such a small, abysmal volume candle. So what is giving you the confidence to enter into calls? Again, could have gotten 5 or 10%. If it was a 0 DTE, maybe 10 or 20%. That's not how I trade though. I like getting bigger trades because bigger trades give higher probabilities. So I just avoided getting faked out because the volume was descending, and it not only was descending, it descended to extra like a very big point, right? The difference between this volume candle right here versus this volume candle is very huge. So moving on, you have a very insignificant candle followed by a very large volume candle compared to the previous trend candles that you had, right? Because you have 1, 2, and 3 bullish candles followed by 3 descending volume candles. So the bearish trend, the bearish candle that you had higher volume, which signifies a potential reversal into a downside. So then let's just say, even if you don't want to enter based off of that and you want to be a little bit more passive, that is completely fine. What we can then do is wait for a breakdown of Amazon below this point. So we broke down below the 237.04 kind of hesitation area, and we also broke below 236.55, which is the very important level. So we broke below here. All right, let's say we still haven't got into puts. All right, so what's my next indication of getting into puts? Well, we have this consolidation. We come up here. This right here is another signal for puts because you have a price coming up near to the level. You reject. You have a very insignificant candle, and look at the volume candle that corresponds with it. It's not high, but if you look at not only that candle, but you look at the candle beforehand, the candles are very large compared to the previous candle. So if you did not enter on this one, the next big indication is when you get this bearish candle, which is strong and is also again followed by a bigger volume candle than the previous or the counter trend candle, right? So what I mean by that is, since this is a bearish candle, you want to look at the previous candle that was bullish and be like, hey, this is the bullish candle that we had. But if I look at the corresponding volume candle for it, and you look down on the crosshair, so I'll just move it down. You'll see right over here, the volume candle again is very low. So this is again a random example. I'm not nitpicking here. I just randomly just went to Amazon. I could go to another stock you guys guessed as well. So you can see here that this right here is your third entry or third signal for puts. And you can see, yes, you do have a little hesitation here. You do have a little bit of uptick, but then eventually, what do you see? You see an increase in volume, which a great thing about this is the fact that this also shows that you could potentially hold your trade for longer. Doesn't mean you don't trim, but it means you could potentially hold your runners for longer because you have ascending volume with descending price, which shows that the trend is strong and you could have held it, let's say, even passively to 232.89 or even all the way to 232.31. This trade right here today, since it's Thursday and it's 1 day before expiration, if you took weekly contracts, this would have been 30 to 40%, if not 50. Honestly, if you were to hold it to here, this is, I might be wrong, but I think this is around 60%. So that's the great thing about volume. There's so many times you can look at it, and even if you don't want to primarily look at it or use that as your entry point or your sentiment gauge, you could still eye it and just see how the trend is reacting and how the volume is printing at that time. Let's say you want to go further down into Amazon where there's lower volume. You have the reversal over here. Your next question will be like, hey, how do I tell that the volume that, there's a reversal? Well, this one's a little bit harder to point out. But you can maybe say that, if you're inferencing here, it's 11 a.m. Eastern, or no, sorry, it's 11:15 a.m. Eastern. I'm in the Eastern time zone. So that's almost 2 hours past market open, which means the volume decreases, right? The volume usually decreases past 10:30 a.m. into 12. 12 usually is the lowest volume area. 1, it slightly is increasing, and then 2, it a little bit increases, and 3 o'clock is where it increases a lot, right? So if you're kind of inferencing here, you're like, okay, it's 11 a.m., But I'm getting, after this bullish reversal candle, I'm getting a volume candle that's not maybe higher than the previous bearish candles we had over here, but it's higher than this bearish candle we had over here. Because you could see the volume candle on this previous bearish candle is low, and the bullish candle we had over here, even though it was smaller in size for price, you had a bigger volume candle. And let's say you did not want to enter at that point, that's completely fine. Your corresponding bullish candle was again higher than the previous bearish candle that you had for volume, and also higher than the average volume that you could see. So this is where I would enter into calls. You could enter over here. You can enter wherever you want to enter. You can also use the fact that, here's a small thing. If you could look at this descending price, and you can also look in the volume over here, what's the volume doing? It's decreasing. And the second that bullish price action comes in, the volume is increasing. So now you could kind of see, now we showed the swing trading scenarios. Now you could also see in day trading it's very useful. I'm gonna choose one random ticker, and meanwhile I do show another example. I want you guys to put tickers that you primarily day trade or swing trade in the main chat. So I'll now pick just a few of them, so I could show you how volume is dominant or predominant in any ticker that you trade. I'm going to go to Walmart. No, not a Walmart. Not a lot of you guys trade Walmart. Google? Let's look at Google. Okay. All right. Also, another thing. Another great way, because we talked about before that volume indicates confidence and the opposite of confidence, right? Weakness. So as we stated before, weakness can also signify a range. Because if we go to the Tesla example I talked about earlier, and if we go back, there's a very important point, so stay with me. If we go back to this range, you see that the volume is very low compared to the volume beforehand, right? So you're ranging. That's what happens when you have low volume, you range. So if you take that, and I don't know why people don't talk about this, if you take that, and let's say, we'll go back to Google, right? You can also see here, on a swing trading perspective, you can see that volume has had extremely low average volume compared to when it was trending. So what this signifies is we're going to be stuck in a range for a little bit. Let's go to a day trading perspective. This is what I want you guys to see. I did say that the first 30 minutes and the last 30 minutes is very high volume. Well, how do you figure out, hey, today might be a range day? Very simple. You compare the first 30-minute candles to the previous 30-minute candles, and you try to figure out, hey, is there a lot of traders active at this area? Are they not active? That will tell you. What do I mean by this? Okay, let's take a few instances right here. This whole time, Google's not ranging on a smaller time frame, right? This is your movements to downside primarily, but you do have bounces, and you could see the volume is pretty standard. You have opening candles that are pretty high, but what happens after, again, we have higher volume over here. Whoops, we have higher volume over here. Wow, I don't know why I did that. So we have higher volume over here, and we have ascending price. So we don't have a range primarily, but what happens when you come into this range over here? How could we have avoided trading this range over here? You could see that the opening candles, right? Because the last opening candle that was strong is this candle right here at the start of the range. The following day, you have very, very low volume for opening. If you consider this volume candle right here, and I'll move my crosshair so you can see it. If you look to the left of it, you see where I circled earlier how high the volume was? As you can see, there is such less volume for the opening candle, which signifies that day for that stock or whatever ETF you're looking at can primarily be a range day. Now, this could be completely, not completely wrong, but most times it's usually right. And that's why a lot of times you've heard from me, oh, today's a range day, I'm going to sit out. And the way I primarily tell that is by looking at volume. And you could see I could draw a line. For the time period that Google was in this range, the opening volume was low. For this open, for this, wait, no, where is it? This, look how low this volume is. Look how low that volume is. And then again, for this volume right over here. The moment the opening volume picks up is when we break out of that range and we get into another range. And then you could see once it's predicted to be lower another range again, the volume drops at open. So that's another great way of how you could use volume, if not for entries, to at least tell you, hey, there's a higher probability that it's going to range on this given day if you're day trading. All right? So that's how you can look at volume when it comes to trying to figure out if it's going to be a range day. Now let's go to Google, and we're going to take today's price action and look at this and try to see if we can use volume to kind of signify signal if there was any trade. So let's see. We had an ascending price in the AM in the first, how long is this? First 20 minutes. And you could see if you really want to trade opening trades, I personally don't. I like waiting the first 30 minutes. Your indication of possibly entering or continuing calls is maybe the second candle and being like, hey, it's still very high volume. I want to continue with this. And this would have given you 10%. But again, that's the downside of trading the first 30 minutes is because trends that appear in the first 30 minutes can completely be squashed, especially in a high volatile market, which we are in today. It might not be worth it to trade the first 30 minutes. My opinion, but you could go test it for yourself. So how do we potentially see that there's a reversal coming here? Well, you could see here that when you look at Amazon, there's no clear indication that we could get into a reversal point. And you might be like, oh, haha, all right, volume does not work all the time. Okay, cool, you could say that. But also, what am I missing out on here? I am having complete volatile and inconsistent movement to the downside. Why am I entering in this? Why am I proud for entering in this put? I could maybe be proud if I entered over here and be like, hey, I caught this whole move. Yeah, sure, absolutely. But if you're more of a passive and you want to get into more efficient trades, the better possible trade scenario is waiting for when volume picks up and seeing what's the trend that persists. So you could see here that at 10:30 a.m., which is exactly 1 hour after market open, you have an insignificant candle and you have high volume. So this means that there's going to be a very strong movement that's going to happen afterwards. So right following the candle, we have a bearish candle, but we have a very small volume candle. So we're not possibly entering in this trade. Where we would enter is possibly over here, where this 5-minute candle prints out larger of a volume candle compared to a previous, and that's when we could be like, hey, okay, all right, we've been consolidating to the downside. We had a very, very high volume candle 10 minutes ago. We followed by a bearish candle and now another bearish candle, which is a full body candle, and it's also a higher volume candle than the previous candle. And this trade right here would have been 20 to 30%. Is this the most perfect trade ever? Absolutely not. Why is this not perfect? You could have said, hey, you could enter here, but again, you're stuck in chop. So if this was cleaner and downside movement, this trade would have warranted 60 to 70%. But if you were to get these puts up here, you can check this, and I bet I'm right. If you were to get these puts up here, this would have been 40 to 50%, which is a great trade. But again, that's chop right over here, cut down 20 to 15% of your profits that you would have had. So those are trades I don't like being in. So what are trades I like being in? I would look at this reversal on Amazon. So what's this level I have over here? Let's zoom out. Let's try to see, okay, where the hell is this level coming from? And you could see if I go into a smaller time frame, this is just a top of the range level, which we've rejected multiple times and we've also bounced off of. So this tells me this is a very important level to look at. So, and again, I did not add this level prior to this, call. It's just there, and it worked out. That's the level I was looking at Google that I thought was very important earlier in the week. So we have price descending into this level, and here's the thing. Here's where you had to start using your brain when it comes to volume analysis. As we stated before, once as the time goes on after open, you would consider volume to decrease, especially if it's going in a trend. Because as we've seen in prior examples, if the trend's continuing, yes, at first it will be very strong, but eventually trends have reversals or corrections. So the volume will usually be, it will increase, right? It will increase, increase, increase. The trend will still keep going, and eventually, the volume might like decrease just a little bit. And that's what you might expect when you are day trading. When you're going throughout the time, you'll expect the volume to be high, high, kind of get lower and kind of get lower and kind of get lower and kind of get lower. But what happens if you start getting reversal candles and the volume is either just a little bit higher or stays the same? What this shows is in a time period where volume should be theoretically lower, you're having an unusual amount of traders at that time period. Let me see. I'm seeing this with you guys in real time. If I were to bring up the volume, okay, so it doesn't really show it there. But you could see that if you were to try to get a reversal trade on Amazon, your first indication would be that this candle right here, this very insignificant candle, is followed by just a step higher volume candle compared to the previous candles, right? I wish I could enlarge my volume, but I can't. I don't think I can. Yeah, unfortunately can't. But you can see here, if you kind of look at it very closely, this volume candle is larger than the previous candles. So this shows a potential strong move in either direction. Usually it's a reversal, and then you get a strong bullish candle after that, which yes, is a smaller volume candle. You get another candle after that, which is bearish, which is, let me see, which is bigger but smaller than the insignificant candle. So then you're like, okay, maybe I want to wait for a little more confirmation. Let's say this green candle prints right over here. This volume candle is still insignificant. So then your next indication would be to enter at this point over here where you get a good volume, where you get a good green candle and you also get a good volume candle. This trade over here, if you were to hold it till close, that's me nitpicking right there because honestly, most people would only hold it till here. If you were to hold it till here, this is 15 to 20% usually. If you were to hold it all the way till this point over here, you are getting a little smoother price action, and this would warrant probably 40%. If there was no little slow movement over here, from here to here, this should have been 40 to 50, right? So why is volume not the most perfect on Google right now, right? Looking at this, well, it's very simple. Is because we had tech earnings yesterday, and we had Apple earnings today. So that means a lot of people are very panicking, or they're buying. They're either buying or selling on a very rapid rate for their shares when it comes to Google, Apple, and whatever. And it definitely correlates with Google because people are getting ready for the earnings call that came up, right? So that's why like if you look at a higher volatile stock, especially when an event like FOMC earnings or another tech-related, sector-related earnings is coming up, volume will not be that great to trade. But if we were to go to another sector, like let's say Walmart or Kroger's, the volume will be much clearer, especially on days when like tech earnings is reporting, and Kroger's and Walmart's not really correlated with tech earnings. So I'm looking at your guys' main chat requests. You guys are talking about SPY and QQQ. So we'll go to SPY and QQQ. And yes, of course, volume works for SPY and QQQ. Why would it not? Volume, again, just talks about the amount of shares that are traded. So it will, of course, work on ETFs. How would you look at the volume over here? Well, you could see opens right over here opens right over here at 9:30 a.m. Look at this, 9:30 a.m. If I zoom out to 30-minute, and if I go to today's open, we go to today's open. This is today's opening candle. Compare this opening candle to the previous opening candles. So this is low, right? And this is higher. So on days when it was actually trending, the opening volume was always higher. But on days when it kind of chopped, and the reason why I'm pointing this out on the ETF is because you're trading 0DTEs primarily, right? So you don't want to be stuck in chop, because the second you're stuck in chop, your theta hits you hard. So you definitely want to keep an eye out of the opening candle and how the volume prints on that. So, all right, we have an uptick in price. Nothing really we can see in volume because it's, again, before the first 30 minutes. First 30 minutes pass, it's 10 a.m. You could see we have a somewhat of a small mini range right over here. And what you could try to see is you look at the volume. You're like, okay, what's this high volume? That's with the bearish candle. So the bearish candle kind of is like, okay, all right, so the trend might be bearish here. And the second you break out of this range, that's when you get a print of a, no wait, you get a lower print and then you get a higher print on this bullish candle over here. So if you were to look at volume on SPY right now on today's price action, volume is not giving you the clearest indication of an entry point, because what it's kind of representing to you is you're not getting into a big trade, you're getting into smaller trades that warrant smaller percentages. So how do we get into the big trade? Well, the big trade happened right over here. Let's see right now if volume kind of helped us give us confidence in getting into calls. We can use the previous low, or this hesitation area, as a level. Why am I using 602.47 as a level? Well, you can see here this was the prior hesitation area and the support. And also, you can see it's a previous point where SPY kind of hesitated, broke above, broke down below, broke back above, broke above it, right? So it's an important area to look at. So we could see here, and I'm getting tired, so I'm going to end this talking a little bit and you guys can ask questions. You can see here we have descending price into this level. And we're gonna focus only on this volume in this area right over here, which is again during the 12 o'clock area, which is usually where volume is very low. So you could see here that once SPY starts ticking to the upside, the volume starts increasing, followed by this high volume candle right here, right? You could see here at 12:30, you got a high volume candle, and the next high volume candle is followed by this bullish candle right over here. So if you want to wait for confirmation, the confirmation would have been at this 12:45 candle where you had an okay green bullish candle and you had a decent volume candle here at 12:45. And then the price kept on ascending, right? You got another range over here, and then the volume picks up again, but again, as usual, near the last 30 minutes, volume picks up as well. So that's how you trade using volume. As you can see, when it comes to day trading, volume can be a little bit tricky because you have to factor in many things such as opening volume, closing volume. You have to factor like, oh, okay, all right, is this lower than this time period? Is this higher above the average? So yes, volume does work on day trades, but it sometimes can work a lot better when that stock is not leading into any important event. Again, that's economic events, that's FOMC, stuff like that, or earnings for that stock or stock related to it. So it's always going to work better on low volatile stocks like Walmart, Kroger, Cisco, and stuff like that. But it can also work on high volatile stocks as long as you use it in times where there's no huge events coming up. So that's my whole spiel on volume analysis and the basics of it. And the next time we're going to talk about volume, because we already talked about VRVP and how important that is, so you could check that video. The next time we talk about volume, I'm actually going to be talking about how you could potentially remove the whole volume candles over here and actually just look at the candles itself, the price action candles, and inference without using, I'm not talking about the volume candles that, that TradingView added. You can actually just look at these candles over here and kind of dictate what the volume would be. So that's basically all I had to talk about volume analysis. If you guys have questions about it, you can go ahead and ask, and not ask, ask in the main chats. I would prefer you put in the main chat, but I'll still answer questions that you guys put in the live session chat as well. So I'm going to go through the questions right now. Do you think, actually bring over the screen over here. Do you think white call volume is less noise? Yeah, I mean, I already went over that. I think it's less noise, less hesitation, right? Less things to look at. Why not make it simpler? Question for Endostream, do you use this for day trading NASDAQ as well, or mainly just swing trades? That's a really great question. I do use this. I do use this for NASDAQ. You can again, why did I delete it? You can again bring up volume. Right, my default so was set to gray. And you can also see on futures, the volume shows up great, right? And the great thing is, you could kind of use it for the overnight sessions as well. Because you could see when the trends are strong, the volume increases, right? And when the trend gets weaker, it decreases. So volume still really works well on futures. It's not just for swing trading, and it's not just for swing trade. It's not just for swing trading, and it's not just for stocks. So it does work for futures as well. As long as you're looking at a ticker as the actual, what's it called? The actual futures. So MES, which is just a micro version of ES, or MNQ, which is just a micro version of NQ. Because if you guys know, when it comes to trading futures, I primarily trade micros. I never trade minis. There's a whole thesis about that, but we'll talk about that when we have our live session on futures. Getting too far ahead of myself. But yeah, it works on trading NASDAQ or futures as well. You should use replay on TradingView and try your thought process, pick it randomly, and then not show the chart's outcome as well. Hindsight, of course, in hindsight, everything is easier to evaluate. But also, if I were to do the whole rewind and replay thing, that's going to be a lot more longer time. The truth of the matter is, this will stick with you a lot better. A volume analysis will stick with you a lot better if you actually go out tomorrow or next week or whenever and not have to trade primarily according to it, but just observe how volume works on not just one stock, like not just QQQ, but look across a certain set of stocks, right? Look at QQQ, SPY, Apple. Look at Apple. Apple had earnings day, right? Look at how the volume reacts to its earning moves and how it reacts to that, right? Look at Microsoft. Microsoft had earnings. It completely collapsed. Look at Meta. Look at Kroger's. Look at Walmart. Look at Home Depot. Look at Costco. Look at the stocks that are not volatile and look at the stocks that are volatile. And try to make your own observations of volume, because when you do that, I've personally found it where the observations and the understanding stick with me a lot better. Now, you could look at the 5-minute, you could look at daily. You could literally, after the session ends, go look at whatever stock you trade or just any random stock and just look at how well the volume shows, and just kind of gives you not confidence, but confirmation when it comes to a lot of stocks. Again, it works for day trading, but the best time to use it is when you're trying to swing trade. Nvidia, I'll look into that. If we have time. Let's see. Thank you. I appreciate that. Can you make these live sessions into a private YouTube link? I'm slow and I cannot follow along as fast and would appreciate the ability to refer back to the video. Well, the funny thing is, I guess you're here for the first time. We have a YouTube channel, and if you actually look on the channel side over here, there is the live recordings. That will directly take you to the recordings I post. And then from there, if you click on this, you go into our YouTube channel. Whoops, right? You go into the video, and you can actually just go to our YouTube channel, where you'll find a bunch of our videos, and you could hear my hideous monotone voice as long as you want. So our YouTube, all of the live sessions we have are recorded, 99% of them, and they're all on here. There's videos printing all the way back from 2 years ago. That should say 3, because technically it's almost 3. So we have a YouTube channel. You could refer to that when it comes to recordings. What's the big candle indicator called? Oh, well, that's called, so on TradingView, you have this thing called volume candles. It tries to represent the volume when it comes to the price action. So if you go to the the different type of candle charts, you could all hover over volume candles. This is not a bad thing to use. If you prefer this, you absolutely can. The personal reason of why I don't use it, I have OCD and I don't like my charts having abnormally sized, different sized candles. And I find it easier to find patterns, you know, using just the regular candles. And I just refer to the volume candles on the bottom if I need to. So yeah, you can absolutely use that. Volume, yeah, so it's called a volume candle. It's the different type of, what's it called? Charts you can use. Saw the volume profile on your streams but never knew how to read it. Yeah, so it's really great. I think volume profile is one of the most important things alongside volume that you can have on your chart. We do have a recording back here, how to use VRVP. It's only 46 minutes long. Definitely worth a watch because the way I use it is very unique and I personally think it's the right way of using it. That's just my opinion. So yeah, it talks about points that like literally 99% of the people don't talk about when it comes to volume profiles. So check that video out. But yeah, I think that's the last questions you guys have. I'm gonna quickly go over to QQQ. We'll do NVIDIA, and then I'll let JP pitch in any last things if he has to say anything. Looking at QQQ over here, again, similar to SPY, very volatile, a lot of chop. The only real indication you had to enter into a good trade was kind of this little up peak in volume over here, because you have an up peak during a time where you would expect lower volume to be, and then you have a follow trend to the upside. So I did not personally take these QQQ calls or NASDAQ longs today, just because I was taking a break because IBM kind of set me decent. I did take SPX spreads, but that's a whole nother story. But I think, I mean, judging the fact that this was 0 DTE, factoring in the fact that there was somewhat of time to reach here, these calls, someone could correct me if I'm wrong, maybe went 50 to 70%, if not more. So the indication really was over here. And that's why also, if you guys actually pay attention, my day trades are not always near open. In fact, they're a little bit later throughout the day. And the reason why that is because a lot of dust settles and then you're able to read volume and price action a lot cleaner, right? Over here, the candles, as you guys, if you've been in the previous live sessions, I always talk about how I love my candles to have wicks and clean bodies. There is of course some clean wicks and some clean bodies, but you see there's a lot more over here in this time frame and a lot more stability. So once you go a little bit later into the market, you get a lot more stable price action. Not saying that it will always be stable, but majority of the times you will. And that's where I like to usually day trade. So yeah, let's move on to NVIDIA. Let's see if we can see anything on volume today. Again, you guys are choosing stocks that are very volatile today because of, Apple earnings and everything like that. And then the previous tech earnings we had yesterday. So you're not going to find the most cleanest volume indication. But one thing I forgot to talk about, which I'm glad whoever asked NVIDIA brought up NVIDIA, is how volume shows what could possibly happen when you're approaching a zone, an area of interest, or a level, whatever you want to call it. So over here on NVIDIA, I have this green box. What does this green box represent? Well, if we zoom out to NVIDIA, this was an area of interest for me. When I say area of interest, and I'll have a live session on it, it's just an area where the price always hesitates or breaks really, or just, it's an important area to break through, look at, because price either breaks out or breaks down around this point, right? So as you can see, this green area right over here is, if price usually creeps up into it, it usually hesitates or breaks out or breaks down. I'm stuttering a lot. I'm sorry. I need to drink some water. But so I was looking at this area and I bought NVIDIA shares today. And the reason why I bought NVIDIA shares is because we creeped down back into this area, just similar to what we did on Monday and Tuesday. And I'm looking at this, I'm like, okay, all right, you guys know me. One of my favorite patterns is the ascending scallop. We have here on the 5-minute over here. And patterns don't always repeat themselves the same way, but they often rhyme. That sounds cliche, but you know what I mean. You have another possible ascending scallop. So what I'm looking at here is a repeat of what happened. And when I'm looking at this, I'll even go to the 15-minute. When I'm looking at this, what do you see here? You see that there is an uptick in volume once we come to the area down here. Which again, you didn't have to have this area. You could just look at this at a potential double bottom, and you could have quoted this as a demand zone. And you could have been like, hey, price is coming down to this demand zone, and you're having an uptick in volume. Which means when you have an uptick in volume close to an area before you reach it, there could be a chance of a breakout or reversal. So then your next question is, okay, how do I tell if it's a reversal or if it's just going to break down into this area? Well, this is where we had to be patient. We don't enter in over here. There's no need to, because there's nothing really indicating that we should get in over here. If you want to really be nitpicky, you could literally look at this bullish candle and be like, okay, all right, there's a little uptick in volume if you look at the corresponding candle. But if you just wait, just 20, what is this, 20, 15 minutes or 30 minutes, you come to this candle over here. Now, this candle is one of my favorite candles to ever see on a bull setup that I'm looking at. It's a nice candle, very clean body, barely a wick to the upside, and even though it's not a nice long wick to the downside, it still has a wick there, which represents that sellers were there, but buyers were able to push it up. But hey, if you look at the corresponding volume candle, it's not significant. So where's our confirmation? The second we get this breakout candle right over here. Once this bouncing candle happens, this is where I would want to get into calls if I'm a passive trader, right? If I did not enter here, this is where I'd want to enter. So I could enter here, I could get a 10 to 20% rally, right? And then I could wait, right? Let's say if I didn't even enter and I waited over here, you kind of see the volume decreases once we get the bearish trend. And then again, time goes on. You can see the volume decreases because we're in a range. But the second we start getting near 1:55 p.m., again, this is not the last 30 minutes. So the fact that we're getting insane volume around 1:55 shows that there's going to be a strong trend. And what is the trend? We get 2 bullish candles followed by 2 strong volume candles compared to previous candles. And that's your trade. This call right over here would have been an easy 60 to 80%. And I'm so glad that someone brought up NVIDIA, because I had to show you guys Amazon and Google, which are heavily impacted, yes, by Apple earnings, just like NVIDIA was. But since NVIDIA is a lot more traded than both of them, the volume is a lot more cleaner. So you could see right here how this would have been a perfect trade. You could have gotten back here and you could have held and you could have got a better entry point and a higher percentage. But this right here would have been the perfect trade using volume and just price. So that's how, right, I would look at this, because what do you have following this bounce off of this area of interest or demands or whatever you want to call it, is you have a higher low, and that is bullish, right? If you have a low followed by a range, and that range has a breakout to the upside, that is a bullish signal, right? Because you are having a range, and instead of it breaking down, you're having a bounce to the upside. That is a higher low, and that is very bullish. And again, if you drew out this range, and even if you want to make it smaller, if you drew out this range right here, how do we trade the breakout? We see volume creeping up even more. We have a strong candle. We have a breakout candle, and you have another breakout candle. So even if you did not want to enter into this, this would have been your perfect confirmation right here. And that's how you read a volume, just completely to the basics. But yeah, I was talking for 1 hour and 18 minutes straight, so I'm kind of burnt out from that. No, I cannot trace your money because I'm not a financial advisor. But JPD, was there anything you wanted to add or questions you had related to volume?
No, I think you summed it up really nicely. I think that for people that are having a hard time understanding how volume works or the dynamics of it, they can use the volume candles. They've been very helpful for me, and I was introduced to them as soon as they came out by Tom Nightingale, who we had here on one of our sessions. I used to use volume a lot on my chart because I'm an SMA EMA trader, and I just felt that it was taking up a lot of space, and ever since I started using the volume, candles. It's been very helpful for me, especially on the last 30 minutes when we're looking to take swing trades. So yeah, if anybody wants to use them, feel free to use those.
Absolutely. It's all up to preference. I personally
Yeah.
think that the regular volume candles here serve a greater and higher purpose than the volume candles that you could get from up here. But if these are something that are easier for you to read, just like JP said, be my guest. It's always whatever works for you in the end. So let's look at a few examples. Meanwhile, you guys put in tickers or last few questions, and then we'll wrap it up in just a little bit. How do we read volume? Because I'm gonna look at swing trades. Because looking at day trades, I gotta just factor in so many things, and I'm down from 2.3 brain cells to
For one,
1.4. Yeah, thank you,
you want to
JP.
see a nice you want to see a nice setup.
Wait, hold on. I'm gonna go through their things, and then I'll look at the one that you want me to look at. But looking at Home Depot right over here, where's the perfect trade? Well, we have descending price, right? And then you have, yes, you have ascending volume over here. So this means that this bearish trend was very strong. In fact, if you guys remember, this was the time where my finals was going on, and we got into Home Depot puts, and we got into call credit spreads, and we made massive amount of gains on this. I don't know why I used gains. I feel like a 14-year-old, but the great trade here that also would be on Home Depot is the reversal trade. So how do we figure out there's a reversal trade going on? Well, the first time we would have our eyes on a potential reversal trade is this first abnormal candle, volume candle we have over here. You have an insignificant price candle. You can kind of see here that you have a range. Sorry, I used the wrong thing. If I sound tired, I'm sorry. But you have a range here, and you could see that you have high volume again, and this high volume, if you draw a line or if you just look at the crosshairs, it is significantly higher compared to the previous volume. And then the candles following that are not anything clean, but the second it breaks out, you're like, okay, all right, we're out of this range, and when we're out of this range, we again have high volume. So you can even not take the trade on this candle and not on this candle or not even on this candle, but you could take it on this candle right over here, because this candle has ascending volume, and this is the highest candle within that time frame. And you can see after that, with a nice bullish candle, you have a nice move into the upside. Another main focus and the main point you could kind of see here with this example is you can't just use volume just as is. You need to price in of how the candles are looking at. It's not just volume itself, it's volume and price, right? Even if I just look at Home Depot on a larger scale, what can I see here? Well, I mean, if I were to compare it to the volume that's all the way back here, you could kind of see, even if you look at the peaks, the volume is still increasing, right? And this was during a bullish trend. So that just kept on signifying that, hey, Home Depot is very bullish. And if you guys remember, during this time frame, especially during this time frame right over here, we kept on taking calls. We only took calls on Home Depot. And the reason why I did that is because of the volume over here. That's legitimately the reason why. I found no reason to take puts because the volume just only kept on increasing. And again, if you want to look at volume on an easier scope, you could change this from a column to an area, and then it becomes in a line, and you could see this, right? And you can move down the volume over here, and you could see that the volume just kept on increasing. And you could always use the volume SMA to kind of also get a little gauge on the volume that's been going on. So you can see here during this standpoint, you can see you kept on getting volume above the SMA, or not the SMA, the moving average, which signifies that the sentiment confidence is pretty high. All right, let's move on to the next example. We'll do SoFi, we'll do DPZ, we'll do Intel, and then we'll do the stock that JP was talking about. So what was it? We were doing SoFi, so let's look at SoFi. Right. All right. I'm gonna keep it as an area just because I've shown so many what's it called, examples with the column, so I'm going to use the area. How do we take this trade? So we've had SoFi in this range. Let's even come back. Let's just go all the way back here. Not nitpicking, I'm just showing you. We've had this range over here with SoFi. The volume was very high as it came into this range, and then as the time went on, you could see the volume crept down very low. When volume picked up is when the price broke out of the range. You could see here where we get this entry points to continue the trend is when we get two huge peaks right over here. Yes, you can say earnings help that out. So if you want to remove that, your signal point was right over here. And if I go to columns, or honestly, I'll just show you right here. The signal point right here was SoFi. For SoFi was right here on this massive uptick. Because ever since then, if you were to take shares or leaps, this trade, even call options, honestly, if you had a longer dated like 4 weeks out and you were fine with holding it, if you were to just be a normal trader and you were to just hold it to this uptick over here, that's 35%. And if you were to be more like me, and let's say hold till all the way to the high over here at 66%. So it's amazing to see how volume is when it's breaking out of range. And I think this is one of the biggest benefits of volume. So that's how I would look at it on SoFi. And then if you want to look at it on a just like near the recent time, you could see here when you had this, you could call it a falling wedge if you want, right? Or you could call it descending channel, doesn't matter. Both are bearish and leading into future bullish outcomes. You could see, if I draw a trend line, just to make it simpler for you, the overall volume is descending. And you could even see here, you could see that because the moving average is also creeping down a little bit lower. So if you can't see it just with your eye, the moving average will kind of show it for you. So you have descending volume, and then the volume, yes, it does pick up over here, but nothing really follows it, right? You get a breakout. But what did I say about breakouts? If a breakout is followed by very insignificant volume, then it's not something worth looking at. So when does volume pick up again? Volume picks up again. Let me delete this just so I could show you. Let me remove this. Volume picks up the second we start breaking out. So we start breaking out right over here. And you can see the second we start breaking out, we have an uptick in volume. So this is how I trade SoFi. If I'm looking at calls already, I'm like, okay, all right, the volume's picking up. So there's a higher chance that this will continue into the upside. The next example we'll do is DPZ. All right, DPZ, if you guys didn't know, I've been a favorite of this in my long term for long term. I've not entered yet. Reason why I want to enter this is because if you look at the weekly, whatever you want to look at, there's two possibilities of DPZ. Either this is a drop, base drop, or what I think it is personally is I think if I look at this on a bigger perspective, this is a rally. This is a rally. You have a correction. You have a correction and you have a consolidation period and you're bouncing off, and I'll show you actually right here. You're bouncing off the previous high of this range, this previous range, right? So this range right over here is a previous high range. So what I'm expecting for it to do is to retracing to this point, bouncing up and eventually breaking out. But I'm not going to enter too early. So what I want to do is I want to wait for DPZ to break out of this range, right? Which it's trying to do. And if you guys didn't know, a lot of hedge funds actually started entering into DPZ shares around 4 weeks ago, I think. I think that was a whole uptick in this price. So you can see here we have high volume, but we have an insignificant candle. So what this could potentially show you is we're probably going to come back into this range, unfortunately, unless we break out and we have up creeping volume. So if we start seeing the volume start naturally upticking, then we could be like, okay, all right, DPZ is probably going to break out of this zone. Right, and I'm going to move to the last one very quickly. Intel because I'm getting very tired here, and I could hear JP yawn. I mean, hey, I mean, if crazy thing is, I had a feeling that Intel would beat earnings. Just a feeling. I didn't do anything with it. Intel beat earnings. What can we see here with volume? Well, we could see here with volume that Intel is a shit stock. Sorry if anyone owns it. It's just the truth. We've been stuck in this. We've been stuck in this range, right? We can see that volume is extremely high, which means that volatility has picked up, but eventually volume decreases. And we're having an increase in volume, as you could see here, heading into earnings. And what was Intel doing heading into earnings? It created a lower high. So if you wanted to take an earnings trade, Intel was another good setup. Maybe for shares, because I think that, where did Intel end up closing? Let me see. I'm going to go into the 8-hour. JP's favorite, one of his favorites. So it ended up closing at 2075. I don't know if this is a volatile IV crush. I'm not exactly sure. But if you took this on shares, this would have been a nice trade, right? Because you have a technical setup right here. You have ascending volume, smooth ascending volume, and you have a higher low. So you could have taken shares over there, possibly tried riding this out to this high over here of 22, and then possibly a test of breaking this and then testing the top of this range. So that's how you look at the volume on Intel in terms of a swing perspective. And then if you want to look at the breakout, you want to break out, you want to come test down or just have another bullish candle, and then the volume again is increasing. You want the volume to be increasing while it's creeping up here. It's fine if it increases, comes down, increases, dips down, and then increases again, but you want the overall momentum to be increasing. That's what you want for a continuation. But JP, what's the stock you want me to show?
General Dynamics.
Oh god. Okay. All right. So you talk to me about why you like this trade.
Look at that 30-minute chart.
Oh, okay. All right. Let me
Regular trading hours. Ooh.
I'm hungry, man. It's crazy. Yeah. What do you got here? Well, all right. Before the 30-minute, JP, I know your reason, but do you tell everybody why you have your eye on GD? Because I'm not sure if you mentioned it earlier, but we have a lot more viewers than before. So go ahead if you could tell why.
Do you want me to get all super
No,
conspiracy theory?
just make it very simple.
Oh, well, you suck. So General Dynamics is producing a weapon called Leonidas, which is an electromagnetic pulse weapon that is used to take out enemy drones or drones in general. It's also been reported that they are the company that's building America's version of the Iron Dome. It's teamed up with one of the former partners of Palantir, who started a company called Icarus. Long story short, all of this ties into previous information that was already out. And actually, Sean Ryan, if anyone watches that podcast, interviewed the guy. I always like General Dynamics. I trade military stocks all the time. Raytheon, Lockheed, Northrop Grumman, all these companies. And actually, General Dynamics beat on earnings, and it got sold off just because institutional traders were expecting a bigger beat on the EPS. They actually had better revenue than expected. I think this was an unnecessary sell-off. I love this little 30-minute, which I don't necessarily want to say it's like a little island bottom, but it has a little island form if you want to see it. I think it's gonna recoup all of that. Excuse me. I think it's going to definitely try to go back to that 262 range and eventually go back to that 270. I do have a little bit of a weird on the 65-minute. You can almost say that there's like this little weird, ugly falling wedge. I think it tries to break above that 65-minute trend line and then reclaim 270 and try to make a move back to the 290s. I've been looking at this trade all day today. I love the 30-minute candle close that it had. I love the 65-minute candle, and I love the 130. Because I like using the 130 because it's the three candles of the trading day. If we can close above 257, and we continue to build more volume into these daily candles, I'll take the longs on that.
I'm actually really glad you brought up the stock. Or I personally don't, invest into military stocks. Moral reasons, that's just me. People find that stupid. That's absolutely fine. But this stock is very clean, and this also ties into how low volatile stocks go really well with volume analysis. So you might be asking where I got this 250, 278 level. I've said it so many times. A previous level, a previous resistance becomes that you break above becomes the easiest and strongest support you could ever identify. So I just drew a rough drawing of where the previous rejection points were. So it's around the 252 or 253 area. You can make it accurate if you want. I don't care. But you could see if you just want to draw it out over here and you just extend it. This is the price point if you're, for example, looking at shares or you're looking at option swings, right? And you want to get the biggest trade out there. This is the area you want to see, and you want to see how the stock reacts to that level or area. So the great thing, and I'm really glad that JP brought this stock up because this is just textbook price and volume analysis trade. You have two great things here. One, yes, you do have volume, you do have earnings. So of course the what's it called? The volume upticked. But here's the thing. The volume also started upticking during bullish price action. So yes, you do have this drop here. I agree with you. But also look at what the drop went through. It went through low volume that did not really ascend. The ascending volume came when it was bullish price action. So you got a really nice candle on the daily. You get a peak in volume. And even if you don't want to enter at this point, right? Let's say you want to wait for more confirmation. JP was talking about how the 30-minute looks great, and I agree. You have somewhat of an ascending scallop, right? And you're also getting a nice 30-minute close, and you're also making a higher low. So what you can see here is a possible gap fill, as he was saying. JP kind of set it up pretty well. But if you wanted to play this from a swing perspective and you want to play passively, what you could do is you can wait for the following next 2 or 3 candles if you are passive, right? And you can see how the volume reacts to that. If you see a increase in volume, doesn't mean that we're just on the area chart right now, but doesn't mean that the volume has to go from here to here. It just means like the volume can be flat or low, but then let's say you get 2 bullish candles and at least the second bullish candle is followed by an uptick in volume. That can show you a higher probability for a continuation in trend. For GD, for example, to break out of this ugly
Yep, I
falling
have
wedge.
that ugly falling wedge.
Yeah, exactly. And this would break out of the trend line he's talking about. I'm not saying this will go like to 300 right
It's gonna
away.
hit the 285, and then it hits that volume shelf at 295.
Yep, right here. But yep, this is how you can tie volume, and I'm actually glad you brought up this example. So, yeah,
I
I
love
mean,
this chart, man. And you know
yeah,
what I love about this kind of stuff?
uh,
It's not affected by anything other than geopolitical tensions, which we have a lot of. But I mean, it's like it's not, Apple earnings doesn't affect it. Nvidia, this is government contracts, government spending, wars, all that stuff. And listen, it's in every single portfolio manager's every single it's something that's in every single portfolio manager's portfolio, right? It has to be in it. It's part of that bundle of things that they have to buy. Is it a gift at 255? Eh, you know, but
oh god.
do I think it has more room down when it had such a solid earnings and it held that 247 and it spiked back up? These are the kind of trades that I like, man. You hold them for a couple of months, you don't have to stress out. What's the time frame on this? I would have to say this is something that you look 30 days out, maybe even 45. Buy a contract that's a little bit more money, but it could pay off.
Yeah, just a disclaimer, no stock or anything we say is the next big thing. These are just all
Oh
our
yeah, no.
personal opinions. I know, like JP just gave a really good explanation of why he personally likes it. You guys always have to do your own due diligence, absolutely, right? I personally see what JP's saying as well. The biggest, I would say, the biggest, whenever you have a stock like this, the biggest issue, well, that's too many lines. The biggest issue is getting above the previous low. So that's why I was saying if you want to wait for more confirmation, that's not a bad idea. If you're able to break above this level, or even wait here till you test this trend line and you have higher volume, and you get a break above either of these points and you have increased volume, that's even more possible confirmation, right? So you have two levels you could look at, and again, this all depends on your risk tolerance. And you could kind of perfect this level by using the VRVP. Again, watch that video. You can see you have two levels to look at if you're trying to hold this long term. It's 257, 269.60. So if you want to wait for more confirmation, you could kind of try to see what's going on here, because if you could get past that, you kind of have somewhat of a volume envelope or volume gap over here, so you could trade up a decent amount. But with that being said, I think we're gonna wrap up the call here. JP, any last few words before I give the last remarks?
No, I think we had a great session. I hope everybody enjoyed it. And I hope that you have enough energy to wake up tomorrow in the morning and continue trading with us.
Yeah, you as well, man. It's a pleasure talking to you guys. Pleasure talking to you, JP. Thank you guys all for coming on. Um, well, we definitely like teaching. We're obsessed with this stuff, so it's been a pleasure. Sorry if I sound tired. I'm tired. All right, guys. Good night. Sleep well.
Later, guys
Peace.
and gals.